Hi, good afternoon everyone. My name is Ram Dhamija. Welcome to my channel. Today is 28th of February and today was the last day for February calendar. Expiry of course happened yesterday and we are in a new series of March. And it was a very troubling day for the markets on a whole. The markets fell almost close to 2% on the mainline indices and close to 4% on small cap, mid cap, momentum, alpha, etc. And not only that, we had a lot of sectoral indices falling by almost 4 to 5%, like IT index fell hugely today. So all in all, it was a very rough day for the markets. Now, were we expecting this kind of a fall? Of course, yes, but whenever it comes, it always takes everyone by surprise. If you remember, I had told the same thing in my video some days back that if that 22,750 odd is broken, then the market falls rapidly after that. Whenever a major support is broken, the market finishes off its fall in 3-4 days and it easily eats up 800 to 1000 points from there. And look where we are almost fallen 700-800 points from that level. So this is the nature of the markets, that the fall, whenever it happens, it is very rapid, and then it will meander along for some days. Then probably if the base is made, it goes up, and when the up move happens, it is equally sharp. So you will see that within a week's time or 10 days time, you would have covered 1000 points, 1500 points on the upside as well, without actually anyone coming to know what has happened. And these small indices, the way they fall 4%, 3% each day, they go up similarly, and within no time they are 15% up from the bottom. So that's the nature of the market, and that is what has played out for so many years, and this continues. So there's nothing new in this. It's just that whenever it happens, it's very painful for everyone, all the market participants. The portfolios are bleeding, and when the indexes, small cap, mid cap, etc., falling by 4%, you can imagine what will be happening in the names, individual names over there. So a lot of stocks are down 40, 50, 60, 70% from the top, and there seems to be no hope for those stocks, particular stocks. But that is what it is. If you play with less quality, if you get into names which are suspect, then this is what happens. You don't have an exit door. So that is the nature of the markets, and that has been going on for many years. What we need to be very careful about is, what is this correction? Is this correction actually turning into something more deeper, or is this something that is par for the course? If you ask me, people like me who have seen the markets for many years, it looks like par for the course. There were times, I'm not talking about post 2020, but before that, in 2000, I'm talking about era of 2006, 2007, 2008, there used to be 30% correction every year. And it was considered to be part of the market. But yes, of course, things were very different then, and 2020 things have changed a lot, and now even a 15% correction on the main index looks very high, because simply we are not used to this kind of correction. We are more used to 10% kind of correction at max, and then quick and swift recovery. This time the recovery is nowhere in sight, and that is what the bear markets actually do. However, having said that, there are a lot of positives also coming out of this. Valuations are becoming reasonable, and people are able to make their portfolios for what they had been waiting for a very long time. But mind you, valuations are still very elevated for small caps, mid caps. They are nowhere in the bargain value zone, simply because the earnings have not moved in that particular sector as well. So I will take you through all of these things in the video today, and the analysis, and then finally what is my thought on the market. So I will take you through all those things, starting with, this is the 3-minute for Nifty today. This is what happened. We opened somewhere over here, 22,400, 450 odd, and then from there it was a secular decline. And this was a particular sharp one coming at 12:30, wherein the market just tanked completely, and then it has been in that particular range. So all in all, almost 2% down from today. And mind you, this was on the back of a gap down, so a lot of it is in the gap down as well. And now this is the more important one. This is the chart for on a daily time frame. Now you can see this was the support that I was talking about. So we were trading there on this. We tested almost 10 times. Over here you can see we were not breaking it. Now there was a chance that we go up, and there was a chance that we go down. If we went down, I told you that we are going to probably go 800,000 points straight. That is what has happened. 1, 2, 3, 4. 4 days we are down 800 points. Is it going to go more? Could be. You never know. Like the last correction, we took out almost 1,000 points straight in 7-8 trading days. So that is also possible. And wherever we take a support, then you can expect some sort of a rally also equally sharp. That is also going to get done in like 5-6 days, and we are going to reach a level and then kind of stabilize over there. So that is how the markets actually function. Now coming to what are the other things that happened today. In terms of the straddle premiums, we are pretty much at the same. There was no decay. We opened at 284. We will be closing at 285. But at one point in time, straddles were giving, the options were giving good decay till about 12 o'clock. There was good green MTM. So anyone who would have booked their option positions would have made money. But after that, the big brutal fall came and the options also spiked. So there is not much to be. So my day was flat today. I was in very good green at one point in time, but by the time I realized that I should book some profits, it was too late. So I ended flat, which is okay for this kind of a day, I would say. And as I've said earlier, when you're doing options, one side movement is not a problem. The problem actually comes when there's a both side movement. Coming to the open interest. Now, how does the open interest look like? Of course, bearish. 0.66 is the open interest. 15 crore calls to 10 crore puts for the Nifty weekly. So of course it is bearish, and there is huge amount of options written at 20 to 500 and then subsequently below that. So we will see whether this levels of 22,000 hold or 21,800 hold. We'll have to see, because right now it is quite a bearish setup. Now coming to each individual indices, how they perform. Now if you look at, this is the chart for indices. IT was a big crack today. So IT was the one that was holding out all throughout, but after the Nasdaq rout last night led by Nvidia was down 8% last night, and Nasdaq itself was down hugely. So because of that, the entire IT pack came under pressure and down 4%. So individual IT names were much higher if the index is down 4%. Apart from that, autos, as I had said, no strength at all left in it. It's down minus 3.7. FMCG, again, even after falling so much, is down 2.5% over here, you can see. Public sector enterprise, after falling 28%, is down another 2%. Small caps, now this is an interesting one, 2.5% down today. Midcaps down almost 2.3%. One point in time, they were down 3.5% each. And finally, India VIX has woken up. Now it is up 4.4%, but still it is nothing compared to the kind of fall that happened today. Nifty was down minus 1.88%. Now, this is one chart that I would like to show you. This is the small cap chart. Now, if you look at the small cap chart, the level that we are at right now, okay, now this is the level that we had reached in 2023. December 2023 is when we had reached this level. So we have wiped out one full entire year of gains, and we have come to zero gains for almost 1 year and 2-3 months, right? So this is what happens, and anyone who would have entered over here somewhere in September, October would be down 30%. So this is the nature of the markets, and they actually, especially small cap and all that, if you see over here, I'll take you even further back. This was the last peak that the small cap had seen in December of 21. Now till March of 23, this peak was not crossed. So it was almost 1.5 years of no returns in small caps, and we are reaching similar levels. It's been 1 year, 2 months of no returns in small cap. So these are the brutal corrections, which are also a good time to enter into various indices. But I thought I'll share this chart with all of you to make a point that you should be prepared for this one year of no return, 2 year of no return. In COVID, I remember it had actually gone to 2-3 years of no return for small caps. So even that happens. But the returns after that are quite phenomenal if anyone is able to stick. Now coming to how the heat maps are. So if you look at the heat map for today, I mean everything will be red. Infi -4, TCS -3.5, HCL -3, Wipro -5, Bharti -5, Bajaj Auto -4, Titan almost 5. Even stocks like Nestle were not spared, -3.89, Sun Pharma -3.2, These are huge cuts in big names. These are huge cuts, and mind you that in the big names the valuations are not so bad, and still now this is Nifty Next 50, which is even worse. IRFC minus 6.6, Geo minus 6, Loda minus 5. So I mean, I can go on and on the names. There's no point. It was basically a huge sea of red, as you can see, all across. HAL minus 4.7, PNB minus 5. You name anything, it was down. It was down hugely. Now coming to Nifty 500, there is no point seeing this because there will be names which will be down even more than Nifty and Nifty next. So there's no point seeing that. But let's pick up any sector and let us see how that sector has particularly done. So let's pick up producer and manufacturing, which was one of the favorite sectors of the last bull run. Now you can see over here ABB minus 4. This stock had run up hugely. Cummins minus 3, Suzlon minus 4.6, Inox Wind minus 4, DOMS minus 4, minus 7. This is Tri Turbine, ACE minus 5.5. So there's no point discussing. So you pick up any sector today and you are going to see a huge sea of red in that, and along with the bad names, even the good names have got crushed today. So pick up anything. Hindustan Zinc minus 5, NMDC minus 4. So I will not get into this name. There's no point getting into all these names. Let us look at where the indices are now from their 52 weeks high. Fin Nifty is still holding fort at minus 8.6. Nifty has now crossed 15. So we are almost 16% now down from the peak, 15.8, almost 16. Another 4%, we are in the bear market. Nifty IT is minus 20%, almost minus 20% down. It was at one point in time holding out and it was down. When Nifty was minus 12, IT I remember was minus 7, minus 8. I'm talking about a couple of months back. But now the IT has fallen tremendously. Nifty Midcap is at minus 20. And Nifty small cap and BSE small cap is at minus 25.5%. So huge cuts. Minus 25 is 1/4 of the index has got cut from the peak. Even FMCG is down minus 23. FMCG I can understand that there was a huge valuation issue, but still minus 23 is huge. Nifty momentum is down minus 30%. Realty has crossed minus 30, and Nifty Alpha is down minus 32% from the top. So these are huge numbers. These are not small numbers. These are huge numbers, and the pain will be real in the portfolio right now for a lot of people. So that was that about the markets today. Let's see how the US market opens up and what are the cues over there. From the last I saw US markets, the futures were still in green, but Bitcoin had fallen a lot. Bitcoin had gone below 80,000. Crude was at 72, which was I think good. But let's see how the international markets behave. If the international markets today go up in the night, then it's good. If the international markets are under pressure, then we might have a rough Monday also. We don't know. But the whole point is that, as I've said before, this is the time to look at your portfolios. For me personally, I did a lot of buying today, because we had been waiting for this kind of correction for a long time, and this is the time when you build your portfolios. When you build your solid portfolios, you're getting everything at a discount of 20, 25, 30%. So why would you not want to buy where you feel there is value? And I have said this before, don't buy individual names, buy mutual funds, buy ETFs. And again, I'll plug in my business over here. If anyone is interested in building their mutual fund portfolio, they can contact me, and I help people build their mutual fund portfolios in a very structured way. I use market cap weighted indices of small, mid and large cap, and I use factor indices of momentum, alpha, value, quality, international indices and gold, and then we mix and make a portfolio out of that, and we assign weightages and then we rebalance. So that is how I make the portfolio for people. If anyone is interested, please get in touch with me. Please fill up the Google form and then I'll contact you. But coming back to the point, this is a very good time to build your portfolios. And whenever the bull market comes, then you always have that regret, I did not buy enough during the bear market. So see what does your capital allocation allow you to buy. I know it is a tough time to pull the trigger and buy at this point in time, but then that Warren Buffett famous saying, buy when there is blood on the street, or be fearful when others are greedy, and greedy when others are fearful, kind of thing. So this is the time to buy actually, and provided you know what you're getting into, provided you have a system that okay, I wanted to buy Nifty Alpha for a long time, so now it has come to my level and I'm going to buy that. So you should have those kind of systems in place. Or I wanted to buy Nifty as an index. I'd been waiting for returns down 16%. I'm going to buy it. There's not been a return. 1 year return in Nifty have gone negative now, last 1 year. So that basically means if any point in time you had even done a SIP in Nifty for the last 1 year, your returns would be negative, hugely negative. Even a lump sum would have gone negative for last 1 year. So this is what equity markets do. When they go up, they give you returns disproportionately. When they go down, they take away returns. So you have to be in equities for a long period of time. And 10-year rolling returns for equities are mostly positive. 15 years, 100% positive. So you should have a very long time frame for investment, and stick to it, stick to a plan, stick to SIP, stick to mutual funds. That is how you can achieve your life goals and create wealth for yourself. So tough day, and I'll see if I can do another video over the weekend. Otherwise, I should see you on Monday. And if you like my content, please do subscribe to my channel, and please do share the video with your friends. And a lot of people have told me to share strategies in terms of how to do hedging, etc. I'll see if I get the time. I will probably share some of my insights on that as well. But today is a rough day, but such days do happen in the market. We have to move on and use such days as an opportunity to invest and create our long-term portfolios. So that's it from me. Please take care. Bye bye.